Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is September 5th, and Thursday, and happy Rosh Hashanah to our Jewish friends out there. We got a lot of economic news to cover today, so we're going to just jump right into it. And the first item is the ADP employment number. This is for the private jobs out there, and for the month of August, back in July we had 198,000 new jobs being created. The forecast for a month of August was supposed to taper down a little bit to 185, and the actual number came in at 176 for the month of August. So, disappointing number right there. Then we also got the weekly jobless claim. So every week people applying for unemployment. So last week we had about 332,000 people applying for unemployment. This week the forecast about the same range, 330,000, and it came in at 323. Now, something else I found out there is the Challenger job cuts. I think this is kind of an important number to kind of watch here, even though it doesn't get a lot of press. This is basically the uh, projections as to what's going to be announced for future job cuts out there. So back in July, we had 37,000 uh, basically announcements for job cuts, and for the month of August, there was 50,000. So I had a pretty big jump right there. So that's something definitely to watch out for. Is this these announcements for companies announcing layoffs in the near future? Now the another item here is the productivity for the second quarter. We had a 0.9% the last reading growth in productivity. We figured it was going to improve to 1.9 for the forecast, and it jumped up to 2.3. So productivity was good, uh, and weekly jobless claims were good. But obviously, we're getting so far mixed numbers here with the Challenger job cuts as well as ADP employment. So next item here is the ISM services with August for the month of August. This is we had a 56% growth in July, and for month of August it was supposed to taper down a little bit, and it jumped up to 58.6. So this is obviously very good. The services industry is showing some improvement in the month of August, and we got factory orders for the month of July. So 1.6% percent in the improvement in the factory orders for the month of August. I'm sorry, in June. July was supposed to come down a little bit to 3.5, a negative 3.5, pull back a little bit, and it pulled back 2.4. So obviously, anytime you're negative territory, even though it didn't meet the forecast, it was slightly improved. Still not a good sign there. So again, very mixed bag of news what we got today here. So let's kind of jump over here to the stock market, and the stock market's currently up a little bit. Now, there's not a whole lot of trading because they're basically holding back and analyzing some of the data out there for tomorrow. That's going to be the big job numbers. Some people believe, a lot of investors are starting to think that if we have a good jobs number, then the Fed may go ahead and start the tapering in this month's meetings at the FOMC. Also, we got several different other items here. We got so they're reviewing the data that they think that the Fed will use to make a decision about tapering on the mortgage, or sorry, tapering on the quantitative easing, the stimulus package. We have the G20 coming up this week, so President Obama will be in St. Petersburg with other world leaders, and of course, Russia and China is trying to convince the U.S. to continue the stimulus package as they believe it's going to slow down on the global level, kind of hurt the global level. So this is going to be something else to kind of watch out for. And of course, they're kind of watching over the Syria. So we'll have probably a bit more information this weekend as well as going into next week with what regards to Syria as well as the G20. Might give us some ideas as to maybe maybe the president might put some pressure on the Fed to continue the stimulus package or create another type of package. Remains to be seen. Another note here is Greece is headed for another third bailout in coming November, so that could be something in the twilight or later on to watch out for because they haven't gotten out of gotten out of this economic downturn. They're still kind of in the hole here. So speaking of such, we're going to go ahead and take a look at the bond market, see what's going on with the interest rates, and we're taking a big beating. Yesterday we had a big beating. It took off a bit, and then today it's no different. We probably lost about a little over a point, almost about a point and a half in the pricing. So that means no point loan as of yesterday morning now would cost you at least 1.5 points today. Today we're down about 8.8 basis points. or 3/4 of a point just in today's pricing. What does that translate? That could easily be about a half to 5/8 of a percent in the interest rate increase, that jump there. So we are testing bottoms. We haven't seen this level for quite some time. At least last several years, we haven't been this low on the bond market. So what that means is that when the bond market's going downwards, that means interest rates are rising. When the bond market starts climbing upwards, the interest rates are lowering. And many times you'll see the stock market and the bond market compete for dollars. And right now, a lot of that money is going into the stock market. So tomorrow will be a big day. We'll have to kind of wait and see what it holds. But as of right now, it's not looking good for rates. Rates are still climbing right now. All right, folks. Thanks very much for watching. We'll definitely stay tuned. Watch tomorrow. See what the jobs numbers come out. All right. Thanks again. Have a good day.